Coming up today, chip stocks crash, with Nvidia making a one-day loss record. Is this the AI industry's Sputnik moment? As DeepSeek takes the top place on the App Store, is all as it seems? As they just got hit by a large-scale cyber attack, the street's reaction, and is this really the end of US AI stocks or another Chinese Psyop? It's a monster day, guys. Let's go. And welcome back, guys, to this monster week in the markets that has started off with an absolute bang. Not only do we have mega cap tech earnings this week, we get to hear from the Fed on Wednesday with their interest rate decision. We also get GDP and PCE inflation data this week. We've started off here on Monday with a bit of a rout in chip stocks, or the hardware behind the AI boom, along with power providers as well. But like I'm about to show you, and as you can see on the heat map here, it's actually been a monster rotation in the market, one of the biggest you'll ever see. Growth stock's been hit hard right across the board, led by the biggest stock in the market, and because of its sell-off today, it's no longer the biggest stock, Nvidia, finishing down almost 17%, breaking a record for the single largest one-day loss in market cap in US history. Over 600 billion wiped off Nvidia's valuation just today alone. Over 2 trillion wiped off the entire tech sector. As I'm sure you all heard by now from the Chinese chatbot app breaking onto the scene, DeepSeek, and that's affected a lot of stocks out there, including Taiwan Semi, a company that manufactures high-end AI chips. And just so a quick explainer, for those of you who don't know, DeepSeek is a new artificial intelligence tool from a startup in China with similar capabilities to OpenAI's ChatGPT, open source software that's been trained on older chips, apparently for only $6 million. And the news of this has rattled investors in the market for US AI stocks, companies that make the chips, and those that are investing in these chips as well, like Broadcom here, down 17.5% today. As investors are worried about the huge capex on AI may not be justified if a small Chinese startup can come out and achieve the same thing at a fraction of the cost. All these companies spending hundreds of billions of dollars on GPUs, data centers, and other infrastructure for AI that has been brought into question today. And so that's what we're going to look at in this video. Is that all justified? Is there a big fundamental change? Is it a Chinese psyop at a pivotal time in history? Or is this just a sentiment, fear-induced liquidity crunch? Buy the dip opportunity? What stocks could be the beneficiaries of all this? And much more. So stick with me today. I've got a good one for you. But first, just looking at what's been hit the hardest. Semiconductor ETF, SMH, just after it broke out last week, down almost 10% today on its third worst day in history ever. This shows there is some volatility in this market. And the US-Chinese competition in AI is definitely heating up. At a minimum, an economic war, potentially a trade war, and hopefully not a military war. And this was just after the announcement of the Stargate project last week. Over $500 billion set to be invested in US infrastructure, with Oracle chairman Larry Ellison helping to head it up. His stock got whacked hard today, 13.8%. But some stocks actually had a dramatic recovery after having a huge gap down to start the week, like Amazon actually finished the day higher. Walmart actually broke out to brand new all-time highs. We had value stocks actually finish higher, along with dividend stocks, quite a decent rally in low volatility stocks, 1.5%. So the really safe dividend-paying blue chip stocks actually caught a bid today. And the Dow Jones Industrial actually put in a big bullish engulfing candle, finished the day up 0.68%, with some sectors like staples actually having a great day, up 2.7%, and healthcare up 2.25% as well. And we can see that rotation expressed in the spread charts. High beta versus low volatility coming off hard there today, along with a big jump in value versus growth. Like I said, one of the biggest daily rotations you'll ever see in this market. Dow Jones outperforming the Nasdaq by 3.7% today. So the good news, in my opinion, because of that monster rotation and not broad-based bearish selling right across the board, a complete liquidity drain on the market, means that the bull market is still alive, might actually be a healthy thing, a broadening out of the market. Some other sectors catching up, while tech and growth has a bit of a pullback. And fundamentally, if LLMs, chatbots are following every other technology like they eventually will and get commoditized, going to get cheaper, that's a net beneficiary for all the companies that use AI, and hence could be part of the rotation. The companies that make and sell the hardware are getting hit hardest, but other companies that plan on using AI, well, this could be a great thing. They need less chips, less training, less budget to achieve the same thing. Interestingly, Chinese securities actually held their ground today. FXI and KWEB actually finished the day up, while Nvidia, America's largest company, gets knocked the hardest it has done in a long time. I don't think this is just a coincidence. This has all happened in the first week of Trump's new presidency. But don't get me wrong, there is merit here. We can see in this artificial analysis quality index, DeepSeek is right up there with ChatGPT and quality. It's been open source, so we can all see it. It definitely has the same capability as other leading large language models, LLMs, and it has made it to the top of the charts in the Apple App Store. So no doubt it is a threat to some American incumbents, but I think to believe that they made it for $6 million is ridiculous. And I agree with rumors out there, like we've already been hearing about for a few months. Some Chinese companies have been bypassing the export controls from the US to get their hands hands on advanced Nvidia chips, because we're still yet to fully know whether it really was done for a small budget. There's a lot of questions that need answering, and no doubt they could have done it cheaper, like the Chinese do with just about every other industry and product out there. Those in the industry are impressed. We heard from Jensen Huang, says it's an excellent advancement, but he reiterated that means they're going to need more GPUs. They're already running into bottlenecks at the moment with registrations. Some calling it the Sputnik moment for the AI industry. For those of you who don't know, that's referring to the 1957 event when the Soviets were the first to launch an artificial satellite into space. Got the Americans really worried they were losing the space race. However, the Americans created NASA the next year, put them into overdrive into research, development, spending, and technological advancement resulted in the Americans being the first to land on the moon. 11 years later in '69, the Russians still broke ground first though on innovations, including satellites, going into outer space, exploring other planets, and so on. So no doubt we've got a similar arms race in AI between China and the US this time as well. But overall, I think it's a good thing. The cost of AI coming down. But to think it's completely over for American AI companies, I think is a bit of an overreaction. Like someone said sarcastically on X today, love the DeepSeek app, using it to organize all my finances and passwords. They make it so easy. Implying that he fully trusts a Chinese app. All your data with DeepSeek rests on Chinese servers. And like I said, it's no coincidence. DeepSeek has broken out onto the scene on the first week of the Trump presidency as they're approaching crunch time to do a deal, potentially a new trade war, tariffs. I think it's the Chinese showing off their capability and maybe trying to do a bit of an attack, at least on the capital markets for US AI stocks. Bit of a shot across Trump's bow, if you will. However, that'll probably just lead Trump to double down on AI investment. He knows he's in the race now and he'll want to win this. And at the end of the day, DeepSeek will always be a Chinese product, just like TikTok. It could face regulatory scrutiny in the States, likely will if it gets too big, and there'll always be the censorship with DeepSeek. Of course, OpenAI is not completely transparent either, however, it likely will remain more so than DeepSeek. And let's not forget, DeepSeek was actually spun off from a quantitative hedge fund in China. With some rumors going around, they've actually been short Nvidia, which again would be another good reason why this has been pushed so hard in the media. And now they're reporting apparently they've been hit by a massive cyber attack, and they're limiting user registrations to only those with a mobile phone number in China. I think that's probably BS as well. Their servers are probably just so flooded and they don't have the GPU power to handle it all. I think it's more just a show off of their tech and the CCP really wanting to catch up to America in AI capability. But no doubt it's understandable why a little bit of hot air has come out of these hot stocks lately. For no other reason than profit taking, just a bit of fear, liquidity crunch. They very well likely made DeepSeek cheaper than GPT. I just don't think it's 6 million. But I still think the fundamentals underlying the bull market in AI, uranium, and all other infrastructure are still there. Just like many other industries that Chinese do it cheaper, doesn't completely wipe out the American equivalent industries. And at the end of the day, I agree with this meme here. The market really thinks at this stage, DeepSeek efficiency will reduce GPU demand. However, both a simple and sophisticated explanation could be cheaper AGI will drive even more GPU demand, which I tend to agree with. Something gets cheaper, it can be used more. And so with that big pullback in high beta, high growth, highly valued stocks today, we've seen robotics pull back as well. However, whilst for sure they could continue pulling back here in the short term on none other than a profit-taking liquidity crunch, long term I think this adds to the fundamentals of robotics. Robots need chips and AI to run. And so even if all this is true, China was able to make something equivalent to ChatGPT for $6 million instead of billions and billions, then this is really good for many industries like robotics. Makes them easier and cheaper to roll out and translates into lower costs for developing AI-driven features such as advanced vision systems, object recognition, natural language processing, and complex decision-making algorithms to understand the scenarios they're in. But look at that pullback in nuclear today. Oklo, Nano, NewScale, and Lightbridge all down over 20%. Even other power companies, Constellation Energy, Bloom, and Vistra, electric utilities getting whacked super hard here. So no doubt this is a growth scare at the minimum. The cost to develop and run these LLMs was always going to come down, no doubt. However, just like other technologies, when the cost comes down, more of it gets made. You could think of smartphones, TVs, anything. It's all expensive to start with, and the cost comes down, gets commoditized, but its use case goes up. But look at this, EV batteries got hit hard today, and how you can tell it's a profit-taking, just liquidity crunch across the board is because even unrelated stocks like space came off today. But it wasn't a complete market washout. It's just all these kind of early stage growth names. Even quantum computing came off there a bit there today. Even some cybersecurity an electric vertical takeoff, and crypto, a little bit of a dip as well. So for sure, a bit of a pullback in sentiment could continue. We are still making our way through Q4 earnings. Market really not sure where the Fed's at. Inflation could still tick on the upside. That's why we're seeing a bit of hot money coming out. There's a bit of uncertainty and volatility out there. VIX did have a little spike today, got up to 22 before it really pulled back hard. Option dealers came in there and shorted volatility. Do have a tiny bit of backwardation in the volatility term structure, so we could very well be in for a bit of a volatile week. Saw yields actually pull back as well, giving a little bit of a flight to safety to long dated bonds there. Pullbacks in gold and crude, losing its 50-day VWAP for a little while, and a sharp pullback for uranium. But again, this doesn't change my long-term bullish thesis for uranium nuclear. You'll always see these growth scares and a bull market, and I was bullish on uranium even before the whole AI story came along anyway. The world still needs to convert to nuclear, and so the cost of computing power AI is definitely coming down, but that will just result in more of it being used, more real-world applications, and that'll all still need to be powered, most of it by nuclear. And just looking at some reactions from prominent figures on the street, Dan Ives from Wedbush Securities. We believe the DeepSeek-driven sell-off is a panic street white-knuckle moment that creates a major buying opportunity in Nvidia and other big tech names. And some others from JP Morgan suggest the AI investment cycle might be overhyped. DeepSeek's efficiency could lead to a more efficient future. Jeffries proposes 2 strategies post DeepSeek: continue investing in computing power or focus on efficiency, potentially reducing 2026 AI capex. That's what the market's really worried about. Are we still going to have the largest bull market in corporate capex ever this year? $500 billion in Stargate, Saudis potentially investing up to $1 trillion, along with mega cap tech. All will this really cause them to dial it down a bit and focus on what they've got and be more efficient? I think we'll land somewhere in the middle. They'll still continue to spend big, but no doubt this will cause them to focus on efficiency and get the most out of what they've already got. Bernstein believes the panic is overblown, maintains outperform rating on Nvidia and Broadcom. Citi acknowledges a challenge to US dominance, but emphasized the advantage of access to advanced chips, maintaining a buy on Nvidia. Raymond James suggests that if DeepSeek's innovations are adopted, training costs could decrease, questioning the need for large GPU clusters. Cantor sees DeepSeek's developments as bullish for compute demand, suggesting increased rather than decreased need for GPUs, advocating to buy Nvidia on any dips. So Street's still pretty bullish on Nvidia, whilst acknowledging that DeepSeek is real with what they've got. No doubt they did it for cheaper, but how much cheaper? Plus they can't even scale now because they really need access to Nvidia's latest GPUs. Apparently they'd made their R1 model on a couple of thousand GPUs, whereas Microsoft, Meta, Amazon, Alphabet, they've all bought hundreds of thousands of Nvidia GPUs. Microsoft at the front, almost 500,000. And Elon Musk not far behind too, with how many he's bought for Tesla and XAI, huge GPU clusters. So like I said, if we're about to hit another breakthrough in efficiency and DeepSeek was able to make this chatbot just on a couple of thousand GPUs, imagine what they can do with 1 million. And that's what I think could help take us to the next stage of agent AI and physical AI, because they can already understand the language. Once they got that power to understand their world and they can really compute at breakneck speed for super cheap, like I said, I think that's going to open the door for robotics and other companies that rely on AI to offer their products. If the inputs are a lot cheaper, they can offer their products more cheaper. They'll become more widespread and used. And so stock markets love nothing less than greater economic efficiency for a lower price. So this could be the narrative shift that is needed to broaden out the stock market rally, because we're still getting plenty of stocks rallying out there today. Union Pacific and a bunch of other transports. Healthcare stocks bouncing back like Johnson & Johnson. Retail stocks like Target trading up, and even though some data center stocks like Digital Realty Trust, a REIT, got hit hard pretty today. Most other REITs actually traded up as there's a bit of an appetite for yield out there today. That's why bonds rallied as well, I think. And so we're probably going to hear a bit about this on some earning calls this week. Microsoft, Meta, and Tesla after close on Wednesday. Apple on Thursday. Interesting to hear what they say about this and to what extent they acknowledge DeepSeek's innovation or threat. But the underlying fundamentals are still trending in the right direction. Q4 earnings season, still early. So far, we're coming in with well above averages. Percentage of companies beaten on both the top and bottom lines. Tracking pretty good here. 72% beaten on EPS. Inflation still under control for now. Goldman Sachs thinks PCE will come in about 2.7% year over year this Friday. And the US economy is tracking an annualized rate of 2.6% in Q4. Not a bad number at all. Also be interesting to hear from Jay Powell on Wednesday. How much is he going to push back on Trump's demands for a lower interest rate? And what's his language on inflation like and how he sees the jobs market and so on. We'll also be watching how the 2-year reacts to Jay Powell. It just took out a monthly low today as well, 420, with the 10-year testing its short-term uptrend just above 450. Fed Fund futures still suggesting Fed will be on hold until at least June. We may get one or two more cuts. I think that's still really up for debate as well. We'll also find out on Thursday how well the Eurozone's been growing, expected to come in 1% year over year. Economists expecting the States annualized 2.8% and core PCE, same level as well, 2.8 come Friday. But just to summarize today, guys, no doubt it's warranted. A bit of a sell-off here, a bit of a shakeout in the market at least. There are risks associated with stretched tech stock valuations and enormous spending by some of the biggest tech firms as they pursue their AI ambitions, with valid concerns around what's coming out of DeepSeek, but we're always going to get these growth scares in a bull market. And no doubt the picks and shovel makers of this AI boom are getting hit hard today. Some monster companies having some monster down days. Whilst Chinese tech holds up, and like I said, I don't believe it's a coincidence the timing of all this, just as Trump enters the White House and looking at doing a deal with China or potentially tariffs, trade war. But at the end of the day, I don't believe the greatest capex cycle in history has been ended by a cheap Chinese knockoff that we don't even know for sure how much they did it for. Plus, it's already closed to new registrations. Apparently, they're getting a cyber attack. Questions of security, censorship could end up just like TikTok. It's popular, but it's going to turn into a political football. But that's not to take away the Chinese are advancing in AI and robotics. And at the end of the day, I think the need for less chips or the potential to do a lot more for a lot less investment is going to be a net benefit for the companies that have to buy these chips and use them and what they're capable of doing. And to speaking at a market technical level, we did get that rotation. Blue chip stocks actually finished higher in the day. So it wasn't a complete market washout, but no doubt this pullback in high growth tech AI could have a little further to go. Along with nuclear and power, I just don't think it's the end of the bull market from a $6 million knockoff coming out of China. That's all to get you started this busy week on Wall Street. Thanks very much for sticking with Click Capital. My name's Jared, and I'll see you again tomorrow. Cheers.